Good morning, guys. Holy shit, I'm super orange. How did that happen? Well, that's weird. Give me, fuck it. Who cares? How are you guys doing? Did you miss me? I don't know. Sure. What's up, hang tight? So, Futures has been taunting me all weekend. Ending Friday right at the top of an ascending wedge. But I'm sure that'll pick up volatility tonight, especially given the ongoing global events. Low volume, too. Yeah, it is. George said they sold more puts into that rally and bought more calls to ladder up. They did. They didn't sell a lot of puts though. Not as many as they normally do, but they bought lots of calls to ladder up. I think more importantly is that the market maker deleveraged almost all of their negative hedge. Thoughts on the new war affecting oil? It will. That's that should be the thought on it. It absolutely fucking will. How high do you think oil gaps up? No idea. Awesome. So buy more DVN. DVN's more exposed to natural gas. I mean, it's exposed to crude too, but it's pretty evenly weighted with its natural gas exposure. So sure, I mean their earnings will benefit from it, but things like Oxy and Halliburton will be far more affected. Zom. Oil futures will open later today. Same time as everything else. If you were to play one oil company, what's your preference? I'd probably try to find the one with the least Middle East exposure. Hmm. I'd have to think about that. Do you think this will have an effect on dry bulk shipping, like safe bulkers, SBUL, gas, and Zim? You holding a lot of Zim bags, lost your gun? Yeah, it'll probably have a big effect on them. I mean, it depends on how well they're able to defend the corridors, but if it really escalates a lot. Shipping in the region can get really, really fucked up really quick. I reread the excellent 928 Pickles picks this morning regarding the V. Does last Friday's price action coincide with this theory when they almost lost 4,200? Yes. This is the largest pile of gamma on the chain. Their risk was absolutely imbalanced after the morning drop. So I think what we saw Friday was a large part of the initial recovery was the market maker. So from like 42.25 back to 42.50 ish, 42.20 to 42.50. And then the continuation after that was, long call buying and short put selling. So like right around the time I started to sell, um, right around the time I started to sell calls, like here, the market maker was pretty balanced out here after the morning drop. This was all call buying and pushing higher. So really, like bulls pushed it, another 150 BPS with positioning. Is there any other big commodities that pass through there? All of them. Anything coming out of Eastern Africa or Southeast Asia headed for Europe is going to probably go through there. A lot of things headed for the US are going to go through there, or the East Coast of the US. Anything headed out of like Kazakhstan or Uzbekistan. LMT is a pretty big oil company. I mean, they represent like almost half of Israel. Like they're almost half of Israel's defense spending every year. So yeah, LMT is pretty big. So is General Dynamics and Northrop Grumman. Any chance you could do Discord audio? I'm on a bike. No. That defeats the whole thing. I never do Discord audio. I don't have it set up in Dillionaires either. You need to get YouTube Premium, Popcorn Trader, so you can shrink your YouTube app and still listen to the audio. New bags here. I'm mostly an SB and B dry. I got in recently at the bottom. All right. I'm piling into B dry for the last 6 months. I mean, with conditions getting more extreme there, it's probably not going to benefit either of those. But once things stabilize or normalize in those regions, then the bigger shippers should have an easier time. Probably looking, you're probably looking at a few years hold on that. I know you liked O once it goes down more, a lot more. Can you look at AAT? I mean, I can't really give you any information on the stream about long-term holds that's valuable. I can take a look at them. Their dividend payout seems excessively high, so I'd imagine that comes with some amount of risk. Margins are choppy. What are their cash flows like? Okay, the last 2 quarters. Looks like they were having some cash flow problems back in 2022. Liabilities aren't too bad. Trading below book. Looks like most of their liabilities were accrued longer term, although with the interest rate environment where it is, they may shave back some of their dividend in order to pay those liabilities off rather than refinancing them. It's not advantageous to refinance long-term debt right now, so that might be a risk factor to consider. I don't really know that much about them other than that. Now listen here, some of us have budgets. That's fair. Fine, no popcorn picks for you. Damn it. Do you still expect a push for DN on SPX, or does the weekend's events make that less likely? Well, we'll find out in a few hours, but it could. It could make that a lot less likely. If we start to get a big sell-off, I'm sure volatility is going to spike on the news. So, vol control is going to get blown out. If we start to slip those Vega risk levels again at 4,300, 4,275, 4,250, we end up very much in the same position that we started last week at. And we could go down even further, right? I mean, this is kind of a big deal, especially if the US is going to get involved, which we probably are directly, right? Because there's US citizens that have been killed and kidnapped. I would say that, yeah, we'll first see a realization of that in equity futures. I ended up buying 468 in the money calls on SB, so I'm in it for the long run. Okay. Jesus. I got stopped out of Airbnb with a wild pump. Is the place still valid? I mean, the company still sucks. I bought some calls on Thursday to hedge the upside when it started to experience a little bit then. I held them through Friday, thankfully. I don't think that the bounce is that wild. I mean, it hasn't even hit my risk yet. I wonder how many Airbnbs just went offline in Tel Aviv. Probably a significant number. Do they have international? Yeah. I mean, well, it's true, right? They've lost. I'm sure there's a significant number of Airbnbs in the region. It's a very popular destination. Is it worth grabbing a short-dated SPX straddle tonight via IBKR, or would you expect volatility as soon as options trading opens tonight? I would say that you're probably going to get volatility right off the bat. Like I mean, it started off questionable, and then it's escalated like almost every hour for the last like 24 hours in some degree, right? Like it was the initial Hamas attack, and then you know the IDF started moving into Gaza, and then they were dropping J dams and on large swaths of buildings, right? And um, so then the death toll matched up, and then there were talks of declaring war, and war has now been declared, and I believe Jordan, Iran, Lebanese Hezbollah, and Syrian militants have all stepped forward to show support for Hamas, and then obviously all of Israel's allies, the U.S., UK, Germany, who've all had citizens who've died in the attacks, have all stepped forward to support Israel, right? So then Israel declared war. There were attacks reported on the Lebanese border, where the Israeli armies mobilized like their armored corps. And then there's been flybys of Jordanian aircraft as well on I guess the eastern border. So yeah, it's it's ramping up a little bit, right? Or maybe a lot. The Iranian parliament had a thing going on. So I mean, obviously Hamas has got backers, right? And so we'll see how well supplied they are over the next couple of days. But it's pretty full on at this point. Is it worth grabbing a short dated SPX straddle tonight via IBKR? Or do you expect volatility as soon as the options trading opens tonight? Okay, so I answered that. So getting a longer dated put might be good enough. I mean, if we don't just get like a big pump in Dow with all the like kind of like all of the defense manufacturers are down a bit right now. So that could just create like volatility if we start to see breadth flow back in and tech fall off. Obviously, oil prices are going to be affected most importantly, and that's going to have a reflexive effect on dollar value and yields, which are bonds are kind of already crashing. So there still needs to be clarified if the people are U.S. born citizens or if they are citizens of other countries who also have U.S. citizenship. Yeah, I mean they may be dual Israeli U.S. citizens, but they're still. I mean, like the State Department still confirmed that U.S. citizens are missing and or among the dead. So I don't think they care too much about the dual citizenship effect. That's probably not relevant. I know at least one confirmed German national that was killed. Um, and I believe a few UK nationals. I'm tempted to get bear call spreads on ES about an hour or two after it starts trading tonight, then build a strangle position on top of that spread later in the day. That could be a smart way of approaching it. Will oil exposure in the SPX outweigh the negative outlook of higher oil prices, inflation? What do you think the net effect will be? Well, the S&P 500 is about 8 to 10% energy. Of that, I think like 6% is directly exposed to spot crude pricing. So, it has some effect, but it's not that substantial. I mean, it's significantly less substantial than tech, which is, like 35% of the index divided among 7 fucking companies, right? But immediately, I mean, offices of American companies, tech as well, are under threat, right? There's going to be employees there and stuff like that, and they're going to want to get people out. So there's going to be a lot of fear over what this could cost for a wide variety of companies. I'm sure like Microsoft and Facebook and Google all have a footprint in Israel. So say my SPY 395p for December I bought at 431 is gonna print like a mother lover. I don't know about that, but it might. Tomorrow could just be very volatile. And I think it will depend on how much escalation occurs. I mean, it's kind of escalating hour by hour, so the situation itself is very volatile. BA 2 to conflict and 10.25 earnings. Looks like it's ready for a bit of a rebound. Thoughts? Uh, maybe. I don't know if this is gonna lead directly to more orders from Boeing, but it could. They could recover. I know Raytheon's been battered pretty hard. They're a big supplier in the region. Yeah, Raytheon's been slaughtered over the last couple months. I know LMT's down really hard. So yeah, I would say that all of these have some potential to rebound with the news. What's up, old school Steve-O? Along with food rising. Yeah, well, I mean, Russia could take advantage of this and pressure their Ukrainian position more with the US's interests now divided, right? Although I don't know how much support they're going to provide. Yeah, I'm not really sure how much support they would provide. They've got their own supply chain issues. Every major tech company has a footprint in Israel. Every single one. I know. If you've not done so already, could you please talk about GME and XRT reg show stuff and what this can mean for a possible run and win? At this point, MOAS is $20 for us, I guess. Well, Gamma Max is around 21. Um, Prior instances where GME has been pulled off of reg show have led to price increases within the T+3 period. I don't think this one's going to be all that different. There's still some resilience in the liquidity. It hasn't started to normalize yet beyond the big drop on September 28th where we had that like spike and then fell. Um, but it is contracting. So I mean, we'd wait for the tips to cross. It could be very rapid, similar to October 31st of 2022, where we kind of just saw like everything get covered very quickly in the pre-market into early market open, and upon which it immediately failed. So that's a possibility. If we don't see any covering in the next like 3 days, that increases the confidence for an OPEX run. So it's probably better to have exposure for the whole period without taking on too much theta risk. I've been slowly starting a position in energy. I feel like this is a good reason to add to it, along with other commodities. Thoughts? I agree. If Iran gets involved, that's gonna affect the uranium supply a little bit. Not much, but a little bit. Obviously, oil's gonna be the biggest effect. So yeah, I mean, I've been building commodities and energy exposure for like 6 months now, because more than 6 months actually, because you know, economic crises tend to um, propagate political crises. So does that include other stocks at XRT? Yeah, it could. I don't really track those very much, but yeah, it could, like Macy's and stuff. Are you averaging down on your CPB position? I may be, yeah. There was a while there where CPB cover calls were pretty good. It's one of the reasons I held on to it. And I sold in the money cover calls on it a few times before it dropped. So my cost basis is probably actually like averages out a little lower than what's on there right now. I just haven't done the math on it. But yeah, I'd probably pick up some more soon. Let me see what it's at as of Friday, just to be sure. Yeah, it's pretty close to like the 2021 bottom. Bouncing off 38. Yeah, I might be interested in picking up some around here. I keep a closer eye on M for the XRT thing. Yeah, I agree. M's a little more interesting. Also, Dick's Sporting Goods. They got really hammered recently with their earnings. So both of those might present more attractive opportunities than GME. I think they're both more heavily weighted in XRT too. Although options interest on those, even though GME's options interest is shit, options interest on GME is still relatively a lot higher than like AM or uh, Dix. Shift search hasn't been available for a year, man. And no, and what shift search provided wasn't very valuable anyway. GME's pretty risky right now, though, especially if the broader market starts falling. Yeah, GME's always pretty risky. So, I mean, there's never been a time when GME was low risk. Thoughts on DCA into 2025 TLT 100C? I've been picking up TLT longs for 2025. I like them. I've been getting largely debit spreads, but I think eventually we're going to see a rebound. I'm currently short TLT though, which is something you probably want to be if you're accumulating a long position on it, because for the time being, it's going to continue down. Especially if the expectation is that the Fed is going to raise rates one more time. Is there a play for another bank going under? There could be, yeah. Identifying which bank it is could be kind of important. Two banks went under last week. A smaller U.S. regional bank didn't have very much under management, and actually decently large UK bank went under last week. Metro Bank. So I mean, yeah. First of all, you have two things working against the banks right now, right? Yields are blown out, and the value of their bond holdings is dropping rapidly. So yeah, in a bond route like this, the banks are really at risk. And they can try to turn some of those losses around on equities, but I don't think it'll be sufficient. Yeah, Metro Bank actually did have a lot of assets under management. At first glance, it didn't appear like they did, but they had about 300 billion pounds. It's like 300 and I think it was like $336 billion in assets under management. Not not huge, but not tiny. I didn't say assets. Yes, you did. Will there likely be an increased demand for Israeli-based cybersecurity stocks like CyberArk? Why? Like what about this would create more demand for those products than has already existed? I can't wait till Dork hops on so you can explain why the SPX will hit 4K this week. I'm not giving it to you. I know what you're trying to do. Laser manufacturers? You know, I feel like it was only 2 days ago that we were discussing the absurdity of Jewish space lasers. And here we are. They provide services to banking, insurance, healthcare, and federal industries. Okay, but why would there be an increased demand for their product if they're going through a war, right? Like it's not gonna. That's probably gonna lead to people backing out of their products and trying to find replacements, right? I'm playing Russia isn't already throwing everything they've got at Ukraine to the point they're using gear from the 50s and buying from North Korea. I said that the Russians had their own supply chain issues. Everyone knows Shark's the best distributive system for lasers. Well, I think we could say this safely. We're not going to understand the impacts of this until they've unfolded. All of you looking to profiteer off of it could simply be buying in the wrong direction, and that does only really seem to be one or two people. Um, it's most likely to create a lot of volatility. There may be some increased demand in defense stocks. And then we have no idea where this situation is going to be in the next 4 hours, let alone the next 24 hours, right? It's escalating rapidly. There's still a lot of unknowns, and there's even more unknowns being, handed out to the public. So I would say that it is an event that can strike fear. Probably not on the same scale as the Russia and Ukraine invasion, but similarly. This has to warrant a move up in VIX. Yeah, I'm sure that it is going to change people's perception of volatility, especially if, by tomorrow the US is involved in a greater capacity. Some say that Revolut should buy Metro Bank. Yeah, there's been a lot of discussion about them getting a bailout or someone coming in to purchase them, but I haven't seen anything. I haven't seen anything that's official yet. It just seems like a lot of speculation. So VIX to 12 end of week. The U.S. is sending a naval fleet to the area. Okay. We don't know what we don't know. Yep, that's accurate. I think the best approach tomorrow is probably if you were neutrally positioned at the end of the day on Friday. That's a pretty good spot to be in. If you weren't, play it by ear, right? We'll see where positioning shakes out and how the market reacts to this. There's a lot of different ways it could go. We know kind of what our important levels for S&P are, right? Obviously 4350 where we're trading at now is kind of the center line. If we fall back below 4330, 4300, positioning itself will start to take control. This may be an instance where we see a larger number of shorter dated puts, which is something we haven't seen in quite some time, but that also means that bounces are going to be wild. So I would say that if we do get a big drop and a big spike in volatility, that you should all be very careful with the potential for rebound. This is definitely a situation that could resolve itself rapidly still at this point, or it could become significantly worse, right? I really don't. I'm not really very interested in shipping. It's not something I focus on. I feel similarly towards shipping as I do about pharma and biotech. Getting ETF exposure is a little bit better, but I don't like the industry very much generally. There's very few shipping companies that I would put money in. And I'm sure that any significant trade routes will be protected by Europe and the US. Usually dumbness, new war equals bull market now. Generally speaking, no, but it could. The market's reaction to conflict has always been very mixed. Initially, it's usually fear, and then speculation, then greed, then sometimes fear again. It really just depends how it progresses. There's so many unknowns right now. We don't know the level of U.S. involvement yet. We don't know the level of European involvement yet. We don't know what's going to come from like Lebanon or Syria. I mean, they're both kind of like failed states, right? So they probably don't present a huge amount of risk, but they present some. And then like our more established Middle Eastern states and OPEC members going to join in? Like, is Iran going to join in a military capacity, or simply providing weapons, ammunition, and intelligence, right? And so um, I think there's too many variables right now, and until those narrow down, you're just taking tons of risk trying to figure it out either way. Well, there's a lot more than just defense stocks that have exposure to war, right? How could the bond market being closed affect trading tomorrow? It'll probably increase volatility in equities, right? Since nobody can hedge with bonds during the intraday trading session. My expectations for tomorrow before all this started up was that we would be kind of flat. Um, Due to the bond market being closing, nobody would really want to take too much risk either way. But now, with this starting, it may just drive a lot more volatility in equities, especially if people are going to start using, like bond portfolio managers may use equities to hedge additional bond risk, right? And that could really drive up volatility. But there's other bond markets, and they are open tomorrow, so there's always gilts and European bonds and stuff. So, do you feel like that because of the Wire season 2? That means you hedge with stocks or directly with VIX. Yeah, yeah. But that could also mean that there's a lot of margin risk tomorrow as well, right? Cuts off an avenue to same as cash collateral, and could create liquidity problems. Yeah, I don't think another war is bullish. Like my confidence here is not in the bull side, but the question is how bearish is it going to be? And I'm not really sure it's escalated enough yet at this point to be super bearish just yet. But we do have a lot of other macro conditions, which this is just piling on top of, right? There were a decent amount of puts bought into the rally. There were a decent amount of puts sold into the rally. I wouldn't say bearish positioning got a lot stronger. Towards the end of the day, a little bit better, but not much. I could kind of double check here. Give me 1 second. Yeah, so, I mean, here's the thing though, all of the call positioning on SPX was still pretty short dated. And it appears we still don't have information for Friday. So we'll have to wait for tonight for that. JFresh has been busy trying to compile the market cap of the Mag 7 for the last like 10 years. Do you see yields? Yeah, you can get the yields and you can get the bond value change. So if you want to look at the bonds themselves, you can just look directly at the bond. And then if you want to look at the yields, you can look at the yield. What's more likely, 4,200 or 4,400 for tomorrow? We don't know. I don't think either. Probably 40. I mean, I'm not going to say 4,200, but some amount of volatility is probably going to open up a bit of downside. If we start to slip major support levels to the downside, then maybe we could see 4,200 again. But right now, the positioning is stronger to the upside, or at least end of day Friday it was. I'm sticking to my Friday the 13th crash projection. I thought you guys came up with the name Mag 7, but I found out Friday it's actually called that. Yeah, we didn't come up with that. What time of day is the OI data updated to show the previous day's OI? I believe after 6 p.m. It's like 5 o'clock Central Time. So if we slip and people get margined and can't sell treasuries, how would that work? Well, they'd probably want to buy treasuries if they were having a liquidity issue. But they could buy other shit. Like we said before, they can still hedge with VIX and equities, right? They can hedge with international bonds. There's other bond markets that are open. What's up, Jason? There'll be other avenues, but they're not as liquid. Right? So the US Treasury market is the most liquid market. So obviously having to turn to less liquid markets to hedge can drive a lot of volatility. How come terrible things happen on Friday night when the market is closed? It's quite rude. Sometimes they happen intraday. It's rare, but oh, Dork's making charts. All right. Were there any other questions about any stocks? Tesla, maybe? Some of you might have had some questions about Tesla. There's been a lot of negative news around Tesla over the weekend, and Elon's been saying stupid shit. They keep lowering the prices of all of their models which is not really helping their forward projections for EPS. However, short-dated call positioning on it is still strong. So far, it's managed to stay below the 260 resistance. If I was going to target another short position on it, I would probably wait till it fell below 253 or 250. That breakdown at 250 is kind of important. How about Fubo? Fubo's been shockingly stable. And it's getting shorted very hard. Fubo may actually run. And it may run before their next earnings date, which is pretty far out still, September. It's pretty rare for Fubo to get this illiquid. I'll say that. So yeah, I'd be careful of a run on it. If I got out of some 250 cover calls last Friday. It's stabilizing against the 237 resistance. And mostly staying on trend. It slipped it a little bit, but it looks like any move to the upside is going to bounce it right back above it, right? In which case, we could see a test of 3, maybe even 350 again. Is Tesla dead? Not yet. Although I really want to see the options data from Friday. Because Friday's pump on Tesla was fucking nuts. Thank you for your consistently sagacious insights into the market. You've not only made millions for yourself, but millions for the pickle jar, even though most of us are highly regarded gambling addicts. Well, I mean, I can say that you guys have definitely made millions. Keeping those millions is another story. But thank you, Space Monkey. I appreciate the vote of confidence. Fubo will become the nation's #1 source for information on the Israel-Palestine war. Probably not. Or maybe. I don't know. People still have cable, right? I think. I just wanted Pickle Jar to learn the word sagacious. Okay. Do you find it a bit macabre that for people to be immediately trying to profit off war, or do you think it's not any different from any other factor? I mean, I think if you're an investor, you have to take away the emotional feelings or attachments that come along with it, and you just have to analyze it for what it is, and it's important, obviously. So, no, I don't think it's really that strange, right? And in a way, yeah, you're right. It is kind of just like any other market dynamic. I know there's a lot of people that feel that there's morality to investing, but there really isn't. Especially in the US where so many companies are so inherently tied to one another. It's very hard to invest in anything and say that your investment is morally righteous. Like if you invest in a company and they grow and they're socially progressive or politically progressive or whatever, or environmentally progressive. Um, and BlackRock owns 8% of that company, and BlackRock takes 8% of the money that they make off of that company, and they invest it in Lockheed Martin. It's fucking that mean inherently your money has gone now to, like, the growth that you invested in has now gone to propagate further war. So I mean, it really just depends how many layers deep you're willing to look to make yourself feel okay about it. If you're looking to play a long swing on indices, like 3 to 6 months, would an IWM call QQQQ put pair make sense? Just looks like IWM is near a bottom potentially. It could stay near a bottom, but yeah, I mean, I can understand the value in that pair trade. I don't necessarily agree that the R2K is going to recover super fast in the face of our current economic conditions. But I would agree that tech is wildly overvalued. Okay, but I'm still not buying Geo Group. That's fine. Spike puts are pretty great. Did you comment on how you would play tomorrow? Well, I have a straddle, so I'll probably leverage the winning side of that. Maybe it'll be volatile enough that I'll just make money on both sides of it. That's the advantage of walking into the weekend neutrally positioned, right? Could you talk about Meta a bit? I did a write up pretty recently on them. How do you think they'll do over the next year as far as growth? I could see growth declining. I think I could see corporate spending as a whole dropping. So obviously, companies at the top of the food chain like Meta, Microsoft, their revenues will be hit the hardest because their exposure to other businesses is so broad. So yeah, I do see some declines in revenue over the next, like, 6 months to 2 years, but out of all of the tech companies, Meta's definitely one of the better positioned to absorb that loss. I do not think that their current share price is reflective of those future losses, but that can change. Well, you mentioned you would take profit on spreads at 30-50%. Is that percent of risk or percent of max gains? Percent of max. I mean, sometimes it's percent of risk. I guess it would depend on how much risk I thought there was in the spread. But generally speaking, like on my other accounts, this is one of the things that's like ruined my life with PDT. Um, when a spread's up, I'll usually just close it. Like if there's a reversal or something, I'll just close it and take my profits, right? But with PDT, you don't have that option, so you have to, like, box them, which is awful because you're always going to have a ton of slippage. Or you just sit on them because you can't, or you can't box them, right? Because you don't have enough trades left. Um, and then you're just stuck sitting on the piece of shit until it expires worthless, which is awful. Unconfirmed. Okay, well then don't say it. If it's not confirmed, here, just as some guidance, and let me say this before I pull JFresh and Dork on. I don't, on the Discord especially, I do not want to see any hypothesizing over unconfirmed facts. I don't want to see any proselytizing. Um and I don't want to see, like, just rampant speculation. If you're going to post anything regarding this conflict or war. I want it from a verified source. No fucking like fringe internet media. Um, and stick to the facts. Okay. I will time people out. If you repeatedly do it, I will ban you. It's a extremely politically divisive topic, but it's not something we can avoid talking about. So no fun. If you don't like that, get fucked. I don't care. Because it'll just turn into a cesspool. Like, look at Twitter. The entire Discord will just turn into a cesspool of people arguing over the validity of Israel's claims to the land, and the Discord will get split into factions, and it'll just be a fucking mess. So if you have facts and you have data and you can present them and prove them, fine. If you want to discuss that data and its regards to the effect on financial markets, A-okay. If you want to talk about how Israel's killed Palestinians or Palestinians have killed Israelis, I don't give a shit. Find another fucking online forum for that. Oh, what's up, Army Vet? Welcome back, man. It's been a while. How you doing? Oh, there we go. Hit me up on the Discord if you need me to get you re-added. And absolutely no fucking sources from Twitter. What if the source is JFresh? Then definitely not. Could you go over how to pick, choose good straddle entries? You just buy an at the money call and a put. How do you play a straddle once entered? Well, that depends on what happens overnight. If the market doesn't move significantly out of the current range, you can just treat it like two separate positions and attempt to close them as they move into the money or further into the money to maximize profitability over the range of trading. 3 to 5 DTE is ideal for intra week, and then over the weekend you generally want a little more, like 7 to 10 DTE, which makes it harder. Sometimes those legs that you carry over the weekend get left for dead. But and then if you get any significant move like 150, 200 BPS, obviously you only need to close one side to be profitable at that point. And if that happens, it's best to reposition your straddle in the new trading range that you've entered. They don't fail very often at all. Actually, I very rarely take a loss on them ever. I think that Carl did a bunch of math over the weekend. The standard trading range for the SPX on any given day is like $50. Quick point to make. The fog of war is thick in the first days of conflict. Multiple sources from both sides of the conflict will spin stories, parse through multiple articles to find facts. I'm assuming that you still want to position based on the rumor mill, though. I got super busy teaching middle school kids and wasn't able to trade, but now I'm back and in Fubo with $2 CSBs. Well, nice. The yields on those are pretty good. Welcome back. I mean, you can pay attention to the rumor mill. I just don't want all of the fucking Discord channels turning into rumor mill discussion, right? It's not beneficial to anybody. And like Pog said, especially in the early days of this when there were so many unknowns. All right, let me see what Dork and Jay Fresh are up to. What's up,
Does he
guys?
understand anything I'm talking about?
Hello.
Hey, Girk.
What's going
Kirk's
on?
dead.
I'm
Hey,
here. I'm here. I was just putting my
There's a
headphones on.
lot.
what's going
How you
on?
doing, bud?
Hey, you nailed it. I'm messing with this stupid market cap thing. I'm running just the high priority tickers right now. So maybe we'll have something to talk about at the end of whatever
Yeah,
this is, I guess.
that's cool. I just kind of want to see where Delta ended up. I know. I mean, I've looked at just like the raw data, um, and it looks like a lot of the call positioning doesn't really like the upside call positioning doesn't really extend out past OPEX. So it looks like a very targeted move to like delta neutral, or at
Yeah,
least
with all
that's what
momentum.
they're hoping for. Although the whole war thing might upset that.
Yeah. Yeah, speaking of the war, you know what I found out? I'm starting to think that the guy on Twitter who's been doing TA on PayPal for a year isn't an expert on Middle Eastern conflict.
No,
What?
what?
That's fun.
That was our go-to source.
You'd think it would translate almost perfectly, but it
Yeah.
doesn't.
Has anybody sent him footage of the Iron Dome and seen if he can figure out the Elliott wave comparison for that?
Actually, you know what? I'm pretty sure right now
Maybe we could plot it for him.
most of Twitter's like looking at pictures of Israel and seeing that there's just like open blue sky and they're just like, where's this Iron Dome? Where's all the iron?
It ran out of ammo.
They blew it up. It's gone. There's just sky. There's no iron
Oh
anywhere.
man. Yeah, we briefly mentioned it, but like honestly, like for all our listeners, the fact of the matter is that this is a highly fluid situation, and besides like some commodity stuff, like there's not much of like buy this, sell that to really glean this early on in a conflict like this. You really just have to kind of sit back and watch the news roll in and see where those trends, tend, and then you can start to maybe think about stuff. But like you, defense companies and commodities are really the obvious stuff is all there really is at this point, and
Yeah.
it's not really going to affect overall economic outlook on the US or even like Western nations unless the pattern you see is further escalation and global involvement, right?
Yeah, here's how important it is right now. Um, do you know what's been happening in Syria for the last year? If the answer is nothing, then that's how important this is for the American markets.
Oh yeah.
Well, okay, so you guys are
I mean,
largely correct, but there will be oil futures speculation surrounding this, and
oh sure,
that can
yeah, yeah,
have
yeah. I mean,
fairly significant rapid
I
impacts.
yeah, I think in the next few days, maybe even few weeks, there'll be some interesting volatility. It'll be really hard to understand which way that volatility will shake out. I think people are just going to be rebalancing. Some will be rebalancing into things. Some will be rebalancing out of things.
Yeah.
I'm interested to see if we can shake some short puts, which might give us more volatility to the downside. This permanent bid on everything might crack a little bit. We'll see, but um, it seems like whoever's been selling puts has been perfectly happy to take on an insane amount of risk already. So I don't know if it'll make a difference.
Yeah. It's really like, yeah, it does come down to, yeah, rebalancing and adjusting your risk profile to match the forward volatility of a conflict, especially in a Middle Eastern nation. I mean, conflicts require a lot of energy. So you're gonna like, you think buying oil like is smart, but like there's an issue where oil's probably just gonna gap up at open and then trade flat for the next few days while people figure out how long this could last, right?
You
So
guys want to
it's
talk jobs numbers from Friday? That seems to be an
You
unresolved
want to talk
issue.
about how shitty they actually were?
Yeah. Yeah.
yeah, let's talk
Okay,
about it. I actually would love to.
go for it.
First of all, there's a couple of caveats here. This is a really big seasonal adjustment month because teachers going back to work after the end of the summer. So if you look at the unadjusted numbers, like the massive amount of jobs gains that occurred was just teachers going to work for the fall for the state and local governments. Um, but and so that one you could probably argue that there should be a seasonal adjustment there, right? And if they seasonally adjust it, it's pretty much flat. But the other ones, I mean, again, we come back to these seasonal adjustments. Seasonal adjustments work great when everything is just sort of running smoothly and there's no real big, changes to the economy. And we've got a ton of big changes right now, right? I mean, we already saw that the seasonality of the housing market was significantly delayed this year, I think, as people waited to buy a house for rates to go down. Rates kept going up, so they capitulated later in the year. And so that buying period was delayed, right? And so if you just take the seasonality from last year, you're going to get all sorts of squirrely errors because the seasonality is changing. And so if you look at the seasonal or the non-adjusted numbers for the private sector, I mean, jobs were basically down across the board. I think jobs were up a little bit in transportation services, but that could also just be school. I don't know.
Bus
Um,
drivers.
yeah, but pretty much, I mean, manufacturing services, durables, non-durables, like everything was down pretty significantly.
Hmm. Yeah,
You know, that's interesting. And this kind of points further to the
I wonder how
like when
that affects
economic
the unemployment survey.
I don't know.
I don't know.
But this really points to the whole, underlying issue that and JFresh is right, the seasonal adjustments become less and less accurate as economic conditions change, right? So that's why you always see heading into recessions, the direction of adjustments starts to change and diverge, right? So the adjustments get, either, they go from adjusting up to adjusting down, and then they go from adjusting down a little to adjusting down a lot. It's because we're we're trying to match past data to current numbers, and apply patterns that may or may not be relevant for the situation.
Yeah, and that's why like this is why looking for the next data point drives me nuts, and like the bull narrative. It's like if the next data point is okay, then we're all going to be okay, because there's so much more noise from data point to data point than anyone really gives credence to, and they put so much weight onto like one data point, and it's a little maddening because you're reading tea leaves at that point. I mean, the fact of the matter is that there's so much volatility and seasonality to so many things that they're trying to find a trend in a wildly volatile number, and obviously they're not great at it, right? I mean, the fact that they're not adjusting more than like 50% every data point is actually pretty fantastic. That like anything under 10 or 20% adjustment is pretty good given the amount of uncertainty and volatility in these numbers.
Yeah, and like I think the thing that needs to be sort of pointed out too is that a lot of major market movements that happen in response to like a single data print really is just how that data print affects forward looking, like just how it affects forecasts, right? So as let's just use the Monte Carlo as an example. People are running Monte Carlos on unemployment numbers and all these things, right? And because you're right, they're naturally noisy, but you can suss out trends using historical data and forward projecting it. I know it's not the best, but they do this, and when a data print comes out that skews your forward projection model, you rebalance your risk profile to match that forward projection model, purely algorithmically. Like there's not like a giant desk of traders for JP Morgan sitting there with their finger on the buy and the sell button waiting for the print to come out so they can instantly hit buy or sell,
Yeah,
Well,
I think
day traders
to
do
some
that,
degree there is.
but but like the instant response and the reprice that happens like immediately, it's the same thing with earnings. That reprice, that immediate reprice doesn't happen because everybody all of a sudden got the earnings right at once, and within like a quarter of a second they were able to search out the forward projected earnings and all that stuff. It's really a computer sees it, puts it into its model, forward projects it, and then goes, this is the risk profile we should take based on these
Oh
numbers.
yeah. I thought, I misunderstood what you said. Yeah, I absolutely think that people just have scripts that that just ping all these government data websites, at the right time, right? That's why whenever you're trying to find the data, like right about when it's getting dropped, the latency on the websites are all shit
Yeah.
because all these bots are just sitting there pinging it, looking for the file.
Yeah, exactly. So it's so you really shouldn't extrapolate sentiment to uh the immediate reaction of data. Really, like the long-term trends that follow data are fairly important because now you're looking at, human decisions and, portfolio decisions being made. But yeah, no, the whole idea that you could look at one data point and go on the news and say, yep, this is this or this based on our, what we want. This is the soft landing data print, or this is the hard landing data print. You can't just say that. Right?
I mean, we got the hard landing data print on Friday, and we still bounced, right? So
We've gotten hard landing data print since freaking March or Feb.
yeah, I know.
Like like home prices have turned back around. They're going back up again. We're looking at job growth.
Again, there's a lot of seasonality there. I would say houses are kind of flattish.
Well, they're
Yeah.
just so illiquid that it's really hard.
I think you have a
But
lot
they're
of
not
people.
going
I think
down.
you have a lot of people trying to sell the top of a market that doesn't exist anymore. It's like remember in Feb on GME when people were like, "I'm gonna put in a $400 limit sell on my shares," and like obviously nobody ever got their shares sold at that price, but that's what people with houses are doing right now.
Yeah.
Yeah.
Everything's a meme market. Like it's just memes everywhere. It really opened my eyes because I started in the market. I started caring again really deeply, and then got sucked in from all the meme stuff. But now, as I learn about the rest of the market, it's just memes. It's all memes, all of it.
All the way down.
Yeah, it's
Yeah.
turtles all the way down.
It's pretty crazy. Yeah. Well, this
Like,
is
Speaking
the
of
product
turtles, don't you guys have a competition that you need to start today?
uh-oh.
shit. God, I was not ready.
I don't know. All I know is that
well, that's the
I had
point.
too much. I had too much beer last night, and I was up till like 2 o'clock talking about Dork's penis. That's all I remember.
Yeah, we're talking about the validity of circumcision in
Yeah.
modern medicine.
Yeah, apparently we have very
But
strong
at some
feelings about
point,
it.
you guys challenged each other.
You know what? So bottom line, and I was trying to insinuate this. Bottom line, I really don't care. Everything is relative, and if you want to make a decision for yourself, that's cool. If your parents made a decision for you back before you can remember, then that's cool too, because it's all relative. So like, I really I really don't care. I just find it confusing, and that's okay, right?
Is this what our podcast is now? We're going into controversial. I
Oh,
don't
dude,
care
we can
either.
kill it. Absolutely.
It's
I mean,
whatever, it's always been whatever we want it to be.
Yeah.
Gaff says payroll increases, I think, is the spin, specifically in hospitality and the food industry. Teachers are largely not thought to have much of a direct impact because there's very few educators that can afford to still not work over the summer. And that way job numbers can wash. Teachers impacted used to be much more measurable wave, but the economy is checks notes. Yeah, says here absolute dog water. So this doesn't really modify numbers nearly as much anymore.
well, yeah, teachers are so poor and underpaid that their impact on the economy has as their wages have
Let's
stagnated
just
has
call them what they are, pores.
yeah
Teachers are pores.
yeah. Well, I mean, their wages were okay for a
K through
while,
12 are
Okay, yeah.
they,
porous.
yeah, but they're like, there's a ton of teachers out there, but the thing is that their wages have stagnated so much that their effect on the market has become uh, quite insignificant.
I mean, teaching in this country has always been completely fucked up, right? I mean, it's just like it essentially evolved as a convenient hobby for people's wives who are just sitting around at home with nothing to do. And it's
What did?
never teaching.
Just
And
teaching people?
it's never really become like it's never really fully broken away from that fact that it was largely like a productive hobby for women.
It was,
My
well, I mean, the
philosophy
compulsory.
teacher told me that it was a way for Greek philosophers to get access to large numbers of small boys.
Well, okay. So compulsory education in the United States, I think, was actually meant as a boon to productivity because, you're basically giving all the parents free daycare so they can go back to the factory and make more factory shit.
Yeah, yeah. Well, I mean that once they couldn't employ the children anymore, elementary and middle school became
Exactly.
a lot more popular.
Although summer vacation is still around, I feel very strongly against the length of summer vacation. I'm fine with having breaks, but having such a long break, there's nothing worse.
Do you not get paid during the summer?
I pay myself through research grants.
Oh. So you have to work during the summer too. Like the rest of
Yeah.
the poor teachers.
Yeah.
Yikes.
God damn it.
Oh man.
I'm a
But yeah,
poor.
all in all, like the employment numbers, that just came out, from the sounds of it, it seems like there's further divergence from adjustments and unadjusted numbers, and Girk has been saying this in our late night touchings of the penises um, a lot, which is that the data. I don't put words in your mouth, but like the data itself, there's not really an outcome that is inherently good for the economy. Either rates get raised more or held up high for longer, or we enter into an economic downturn. I mean,
Yeah,
there's
well,
not
that's
really much
because that's
middle
the
ground.
only situation at this point where we see rates cut, right? Is we need a recession or a crash.
Which is
Or we need,
bullish for
or we
equities.
need like 5 to 10 years of economic stagnation.
I mean, the bond market's crashing.
Yeah.
It crashed. It's crashed.
The equity market is still just fighting the bond market. And yeah, I mean, I'm feeling pretty good about my short duration position. I'm just sitting pretty waiting for everything else to collapse, and then I'm just gonna start DCAing into free shit.
Just so you
All I'm
know,
gonna say,
that period where the U.S. 10-year is at like 8 or 9% is gonna last all of like 5 minutes. So
Well,
I hope when you're
I'm in like
planning
a
on
max of
DCAing, you factored that in.
my maximum duration is like 3 years.
Oh, okay. I picked up
all
some
I'm saying,
20s last week.
all I'm
Five
saying is
5.1
B of
was
A.
just too hard to turn down.
All I'm saying is B of A is down 45% from its high at the beginning of 2022. All
I
I'm gonna say.
mean, I think
So
the era of lizard people is over.
So equities are bond villains?
I mean, Meta is.
But yeah, what's the
School?
deal with Meta? Oh, we have a question.
No. Just Frosted Flakes saying that school vacation was to supplement seasonal labor needs.
Yeah, but that's kind of gone away, right?
Oh.
My kids aren't doing any fucking farming in June.
I mean, you should get started because
Yeah, that's your problem. Dave,
food's gonna get expensive. It's time to teach the
Well,
little homies how to plant a row of corn.
Yeah, we've got some room in our backyard that we've got a little garden we haven't done anything with. Maybe we should plant some tomatoes.
Ooh, resurgence of victory gardens. I love it.
That's how we're gonna.
I mean, you look at Kramer. Kramer's Twitter is like half of his Twitter is him posting pictures of his beautiful garden that he planted. So he's already getting ready for the apocalypse while he's telling people to buy the top.
That's bullish on Monsanto.
It's literally like one tweet be like the Mag 7 can go higher, it's gonna be great. And then the next one is like, look at all these fucking cucumbers I just picked from my garden. They're so great.
God damn, dude. I'm just looking at the TLT chart right now, and yeah, dude, this is insane. Aye.
Yeah, and a bunch of people went long on TLT at 85 too. I think they're gonna get run over.
They might. I mean, I don't know. Like the weird thing is that there is such an insanely large short position on treasuries that like part of me thinks that like at some point TLT is going to become a meme stock.
Here's the other thing though. We're spending a lot of money.
Yeah.
So either JPOW's gonna have to eat shit and start buying some of these bonds and pump inflation, or Yellen's gonna have to start dumping even more bonds on people that they don't want or have the capacity to buy unless they start selling other shit. So I think they're going to get run over.
I think it's crunch time.
I think unless the government raises taxes or lowers spending in the near future, which obviously that doesn't seem to be a very productive process right now, I have no interest in long duration.
Yeah.
The day they pass a budget or like raise taxes or something like that is the day I might start buying some.
Yeah, it's I think you're right. Like, and Girk, when you say crunch time, I think you might mean credit crunch time.
Yeah.
Yeah. So
Yeah. Someone's got to buy all. I mean, there's people are mandated to buy all this shit, right? They're gonna have to rebalance.
But at some point, like, and this is kind of like, and maybe I'm just being devil's advocate here, but at some point, those treasury shorts, they're all just future buyers, and they will decide the bottom.
Yeah, I don't know. I don't know how big that position actually is, unhedged, right?
It's definitely hedged with like short vol, right? And it's massive.
Yeah, but I mean, yeah, sure, there could be a bounce at some point. But I don't think it'll be a sustained bounce. So, if you're already, buried in TLT or somewhere else, then that could be an opportunity for you to get out or to take some profits and lower your cost basis.
War solves those issues.
War?
That's what Poopy Pants just said.
No, it doesn't.
War doesn't. So war. Okay. I see where you guys are going with this. All right. I see what you guys are saying about war being an economic stimulator. The issue is that these wars that have been going on don't directly involve the US. And further, increasing our defense spending in the face of these massively inflating interest payments that the US has to make is only going to exacerbate our debt to GDP ratio, and it's gonna increase it by it's
What
like
if Yellen starts
astronomically.
issuing war bonds?
Bullish?
I'm
Okay,
gonna
so I
I'm gonna
uploaded the
sell
data for
everything
like
in
wealth
full
figures.
port.
Oh shit, I didn't do SPXW. God damn it. But we have SPX.
Way to go.
Still looks like shit.
Still looks like shit. That's what I thought. It was gonna kind of look like. Let's see here.
Let's see Tesla.
Dead?
Ew. Wow, it really does
What?
not look good.
Ooh. Tesla dead.
Oh, but
I like
look how much Vega risk they shaved off.
Tesla did it update? It did update. Why? Tesla looks like shit too.
Tesla's, to be fair, Tesla's looked like shit every day. And then everyone comes in and first thing in the morning and closes all their short puts and then buys weeklies.
Yeah. I'm gonna go ahead. I'm gonna take a controversial position and say I'm not bullish on continued price cuts and lower volumes.
It's not a controversial take. Tesla's a terrible company. You're
Here's
just
the thing.
stating the obvious that insane people disagree with.
Look,
This is like Tesla is a meme stock. I mean, I don't think that one's even I think Tesla was probably one of the original quote unquote meme stocks.
Tesla is the meme stock. It's like Vol Short Central.
But there's like some dude who's like been analyzing Tesla for a long time, and like that's like his thing on Twitter is he just goes on and like gives all his numbers and projections, and he's got his charts and his spreadsheets, and he's like full into this. And he, everybody's initial reaction to the price drops last week was nobody saw them coming. They were clearly spooked by it. They didn't like it, but then they immediately started trying to spin it as positive, like trying to gain market share and blah, 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 and all this other bullshit. But this one guy, he sat there and was like, okay, this is how much it's probably going to reduce EPS going forward and this and that. And like, he dropped all these numbers. And it's like, okay, so he's going to start like turning it around. End of his like little tweet thread. Adjusted price target down to $300 bullish, still a buy. What the? Come on,
dude, that was like they're like so Tesla getting back in range with the PEs of other companies in the S&P 500 puts it at $130.
Yeah, it's worth like 40.
I'm just saying, but yeah, no, there's with these so like
because it is a car company, so if you put it
Yeah.
into the same range as competing car companies, it's like $40.
yeah, no, the earnings on it, like the multiples on it are stupid. And
What's the
thing
70,
is
70x,
that
78, something like that?
yeah, it's at 77, I think. It's at 77.
It's stupid.
It's so
Jay
it's
Powell, you printed too much money.
and the thing is, I think Tesla is about to be kind of like Meta, where at some point, you know, I think that all the Tesla bulls are going to have a real big reckoning where there's actually like negative forward guidance, and it like irrefutably negative forward guidance that shows that they're actually becoming a car company and not just a holy shit, this company is going to save the universe company.
That's
And
already happened like 10 times.
it's gonna, but you see what I'm saying, Girk, and I don't want to say this out loud, but you're forcing me to. Is I'm saying that they're going to have some issues with their cash flows, and they're
No
not going to be able to
shit.
service their debts.
They're giving cars
So-
away to keep their sales numbers inflated so their bonds don't get downgraded. So when they do issue debt,
Yeah, but now they're about to have
they'll
to
be
issue
able to
debt.
issue it at a lower yield. What?
They're going to have to issue debt at 5% now, though, even higher. So like,
It's better than issuing it at fucking 9 or 10.
yeah, but that comes next. After
It
they issue
doesn't matter. Like Elon will just take all the money, bankrupt the company, and go do something else, right?
Yeah, and then I get a cheap house.
No, guys, Dojo is going to be AI something.
Something?
Yeah.
Nice.
So
That sounds
everybody's
bullish as fuck.
banking. I think that the real bull case for everybody is they're banking on full self-driving.
But they are also reducing the price of that too.
I know, but
And it doesn't work.
I know, but I'm just trying to the thing is they think that full self-driving, if Tesla can come out with technology that enables full self-driving, and they can license it out, then there's it, especially since they open source their charging shit. Their only hope is licensing out their full self-driving technology. But the thing is no one's gonna want to buy their fucking full self-driving technology. They'd rather just come out with their own that they can service themselves.
Yeah, I mean, a lot of companies,
Isn't
I think are
Mercedes tech like already way ahead of Tesla's?
no, well, not really. So a lot of these companies, like I know people who have some of these cars with like driver assist things. So like,
I have that in my car.
yeah, a lot of them will let you like. I mean, it's pretty standard now it's even standard on some cars, like the cruise control modification, so that you don't have to like play
It just
you know
tracks the
tip.
car in front of you.
Yeah,
Yeah.
yeah, yeah. But there's also some that do like lane control, so you could
Mhm.
like if you're on the highway, you can like read a book. You don't have to like hold on to the wheel. Um, and it works on highways and things that aren't too intense. And then and I think that's the right approach, right? To slowly build these features in until it becomes a full self-driving capability, and that starts to become standard. That's really the only, because we're not going to go overnight from like cars that don't have it to cars that have it, because you're just never going to have an ecosystem that's effective where half the cars are self-driving and half of them are human driven. They have to all be self-driving,
Yeah.
and the only way to do that is to gradually standardize some of these things. My other thing, thinking about Tesla. So Tesla's approach is definitely different than a lot of the other self-driving approaches. The biggest one is that they don't use as many sensors. So a lot of the other self-driving um, algorithms, they utilize lidar, so they have distance, right? They have a sense of distance around them. I believe, and I'm sure can correct me if I'm wrong. I believe Tesla's just trying to do it with only cameras.
I think so. They've been
And
they put cameras all over their car, and then I think they use like backup sensors and things to like park, but nothing like the amount of lidar sensors, and like because there's like a lidar sensor has a lot of moving parts, and and they're expensive. A camera has no moving parts, and you can integrate them pretty much anywhere.
yeah, but the lidars are getting cheaper, and there's a lot of people working in that space. I'm talking like fundamentally, because what Tesla is also trying to do is to do essentially like completely um, machine learning based driving, right? So they want the car to just learn how to drive without any explicit rules being built into the car's programming, right? So they don't have a rule that says if you see this much red with the word stop, you stop. That's not written anywhere. They just have a bunch of video that they collect from all of their customers' cars, probably with or without their permission, and cram it into their dojo or whatever, and crap out correlations, and the end result is that 95% of the time it'll see red in their image, and that's a stop sign, right? And so 95% of the time the correlation will tell them to stop, and then 5% of the time it won't, because that's just how like fuzzy noisy correlations are going to work. Um and, and so this is kind of that challenge, right? Is that you need edge case control, and they have none. And so there's enough of these cars on the road that they're making enough mistakes that people are just like, okay, these edge cases are quite dangerous,
They're
right?
like a parking lot. A parking lot is a very dangerous place for self-driving.
Yeah. But
'Cause
that's so this is my question. If you think about fundamentally how we learn to drive cars, right? So obviously we learn to do it, um, but I want to come back to like that distance perception, right? I think that's why lidar was so obvious to so many people, because our eyes, we have two eyes so we can gauge distance, right? And we have spent a lot of time evolving, the neural networks to process these two images and gauge distance. I don't know how Tesla is going to accomplish that, right? From the cameras. That's a whole other. I don't know. Maybe they need to start the training on like their little robot. I guess they're making robots now too. Although I guess maybe they've doctored their videos, but maybe they need to put it in a little baby robot and put some blocks in front of it and tell it to pick up the blocks, right? So it can learn depth perception and then
Well, I
and then
mean,
put that in a car. I just don't. I think that they're just missing too many of the fundamentals. I don't think that they can just put it in a car and drive enough and then eventually just become a good driver. I
I
think.
I just want to weigh in here. I think their tech is not relevant, right? Like all the tech of it, like sure the camera systems are a cheaper route to getting getting the same data set that they would get from cars equipped with lidar, and yes, Magnanimous is right. They are outsourcing some of their costs to the customer, and they're getting that constant stream of data and in a more robust way than other manufacturers. But the company is terribly run. Their financials are fucking awful, and they're discounting their only revenue source in order to artificially inflate their production numbers.
but that's just tech company gonna tech company.
But tech companies aren't gonna tech company no mo.
I know. Okay, I know.
You can't tech company as a tech company when fucking real rates are at 8%, man.
Well, without cash
It's
flow,
also
you
not a
can't.
tech company; it's a car company.
Yeah.
It's still a little bit of both. I mean, I agree with
99% of its revenue comes from cars.
Discounted cars, heavily
Yeah,
discounted
yeah,
cars.
revenue.
but if you can,
They're almost at the point where they're selling their vehicles as a loss leader.
they're already there.
A
Without
loss
the
leader for nothing.
Yeah.
tax credits, dude, they would be fucking absolutely hosed right now. Like that's the only thing keeping them going is the fact that California gives them $7,000 every time they sell a car.
Yeah.
So
Yeah, I don't get it.
But so JFresh, just and I this is I think it's an interesting discussion talking about depth perception because you've probably studied astronomy to some degree, haven't you?
I guess I'm certainly not an expert in it. I
Give
understand
me
that.
1 second. I'll be right back. You guys keep talking about astronomy.
I understand the basics of it. Sure.
So there's ways you can gauge distance using parallax, right? And you use it for point sources and detection of point sources. And basically what you could do is you could like take a picture of a star during one time of the year and then take a picture of it again from another time of the year, or like a star system and use very slight changes in the angles and the distances that you calculate between two sources to sort of, figure out the distance to like a nearby object.
Yeah, that's how our eyes work.
Yeah, exactly. And I think that was the inspiration for this. So just and so the real challenge with the technology that Tesla is trying to impart, to sort of support your point is that only really works for point sources because, like in terms of doing these calculations because you're looking at a point and how or 2 points and how they change relative to each other. But when you're looking at a nearby object, right, it's not that simple. What you're looking at is more like dimensional analysis, from your two eyes, like how like if you're looking at like a rectangle, right, to keep it in the box analogy, right, you're looking at this rectangle and you're identifying sort of its like how the angles on the rectangle change between your two eyes, so it's a much more nuanced problem.
Yeah, no, I agree. I mean, I I definitely agree with that. I think the issue is are they factoring any of this in? Maybe they are. I don't know.
Well,
Hold
like
on.
if it's a
Carl just
spherical
sent me
object,
something about Tesla, so maybe I can educate myself here.
well, if it's like a spherical object, it's really hard to identify a parallax on it. If it's like a spherical front lit object, trying to identify the distance to it is not easy unless you're like moving towards or away from it. So yeah, there's so many variables and things, and I like the camera idea, but not as a distance measurement. Mostly as a object identification process, because we're really good at that at this point. We can identify shit pretty fucking well. But in terms of gauging distance, there has to be some sort of better way to do it. And I don't think it's necessarily LiDAR, because that requires spinning lasers, and spinning lasers are expensive, and there's moving parts on them, so they can break a lot, right? Like, you want something that's more robust than a very sensitive laser that spins around in circles and up and down. Like, you're basically having a gyroscopically processing top inside your car, and that's just not feasible for long, like for durability's sake. So there's got to be some sort of new thing that comes out that helps us gauge that distance around the car, that is both robust and long lasting, right? And like robust technologically, like where it'll consistently identify distances. A LiDAR can identify, it'll generate a point cloud for you that's really good, but it's you hit a speed bump too hard and all of a sudden you've broken your fucking LiDAR, right? And the two cameras idea is really durable because it's just a couple photo cells, but the problem is that in terms of robustness, it's not very good, because you basically have to feed into a black box and have it just hope that it statistically comes to the same conclusion a human would. So there's got to be something new. And what I kind of like is not necessarily LiDAR, but some sort of shortwave radar. I think would be a lot better for it. Um, that kind of strikes me as a more reasonable.
Yeah, but it looks like the thing Carl sent me, a couple of years ago they had radar and they removed it to go to full vision based control. So something wasn't working with radar. I don't know the details, but
You probably can't get the wavelengths short enough to actually bounce off the cars, the materials, without like a huge power draw.
yeah, I believe that.
So, but there's something out there, and we just haven't found it yet. Maybe what we do is we shoot out little like paintballs from paintball guns, and then we have like little microphones that detect how long it takes for the paintballs to hit the other cars.
Ooh, I like that. What's that game? There's a game on Nintendo that's basically just like a paintball shooter.
Pikmin or whatever.
I know
No,
Splatoon.
That's it.
Yeah.
So you just want like a Splatoon world.
You see, I've always imagined, installing a paintball gun behind the grill of my car so that I can mark those who offend. So that next time I see them on the road, I'll be like, "Yep, that's the guy."
So they haven't washed their car between the time you mark them.
Who said the
it's like a permanent dye. You should
exactly.
Oh, okay.
I guess it's there's no secret that I'm a huge nerd, right? I guess as the data guy, but just to give you guys an idea of how the nerdiness runs deep. When I was a kid, my dad, and I was driving in the car with my dad, and we would, have to deal with some stupid driver. He would say, "I wish I had photon torpedoes installed in my car."
What?
And I could just fire torpedoes at them from Star Trek. So
you're a big nerd.
Yeah.
Look at Magnanimous is fucking having a stroke in chat right now.
What's going on?
Oh, he's like top thief. He started like half an hour
bullish
ago.
On Tesla, right?
Yeah. He's like like a full tilt Tesla, bro.
What? Yeah. All right. Have you seen the new version of their FSD? It's all trained on video. That reported drove it for 6 months. Read what they said. Yeah, but just show me, right? Show me the proof. At this point, I don't even believe anything that Tesla says. They've already lied so many times.
Yeah.
That I need irrefutable evidence.
So the only feasible long-term path towards full self-driving is infrastructure. and being able to use like the more reliable and well-known sort of detection methods that we have, right? So like if we installed little magnets or something, right? Or maybe we adjust the way the paint is formulated for like road stripes, then we could use much more traditional methods of uh, of object finding to create a reliable self-driving car, right? That's really ultimately what we would kind of need.
You
Um,
know,
You know,
you know what would
ironically,
be
there was a company out of Israel that was developing something called SADAR, or it was like Spectrum Enhancement Detection and Ranging Platform. That's gonna
no,
probably, it's probably gonna be put on the back burner for a little bit, but
yeah, it would be really cool, and it'd be a great like infrastructure boost when we need jobs for people to do stuff. Induction based power built into roads so that your cars don't need batteries.
that's a huge amount of power draw to make those inductive fields.
Yeah, and it's a
are
lot
we
of
gonna are we
material
gonna
too.
finally live in the world that the real Tesla wanted?
Yeah,
I mean,
Just
exactly.
wireless power everywhere.
we all just live in a giant
Trains. Oh
electromagnetic
God.
field. That's totally not going to fuck up our protection from solar storms or anything like that.
No.
Carl, here's the thing about trains. America's really big and nobody wants to give up their land.
Well, the government can just take it. They've done it
Well,
before.
plus Americans also love to be able to make quote unquote make decisions for themselves, and trains limit that.
Yeah. And Americans are willing to trade away 3 hours of their life
How are
every
you
day
supposed to see
for
the
that
world's
freedom.
largest thermometer from a train?
What?
You heard me. Like you
The
can't, like
world's
if you're on a road trip or you're going on a vacation and you have to take a train, you can't take pit stops at the world's largest thermometer or see the world's largest pile of cow shit. You know, all the attractions that you run past in the Midwest.
nobody stops at those.
Yes, they do. Yes, they fucking
Oh
do. I've
God.
seen them stopping. People like
Ugh.
people like you with children. And their children are
Well,
like,
we
"Oh
did.
my god."
You know what? We did stop somewhere. I can't remember where. I think it was in like southern Illinois or something. They've got like a big Superman statue, and that's like the whole town. It's like it's like 20 houses, a couple convenience stores, a gas station, and a Superman statue, and like a little park.
Well, and you and I both know that Cornub, if he came, if he was here, the first place he would go is the world's largest cob of corn.
Yeah,
He would go there and he would pay the $10.
it's at Adam Aaron's house.
He knows his corn.
Oh man. Well, Girk, do you want to pull up one of those charts I posted?
Sure, which one? First one?
Why don't we go with the second one?
They both look like shill charts to me.
They're pretty shilly.
All right.
I'm a pretty huge shill, so you know it's only fitting that I post these. The data only goes to Thursday, unfortunately. I hate how they report these fucking effective yields, but like they don't do end of day. They do like the beginning of the next day. That's when they post them, or like sometime like at 10 a.m. or whatever. So this is the effective triple B triple A spread, right? And it's hovering right around 1%. So last week I told you guys I was going to keep an eye on it, and I did,
Okay.
and it trended up through the week, right?
Yep.
And so this is it's not much, but you know when you zoom out, right? The expectation in a soft landing scenario is for these spreads to continue to reduce, right? Which 2023 was like quote unquote the year of the soft landing. And we're still well above historical norms going back to 1994, I think it is, or
Mm-hmm.
95. So, you know, the bond market has not it's just another fun data point that confirms that the bond market has not started to price in a soft landing at all. The bond market, in terms of actual confidence in, you know, small to mid to large sized firms is exactly where it was at the beginning of the year. So, and I'm still going to keep watching this, but I just wanted to point this out that we rebounded and reversed, and it's not like rocketing or anything. So that's kind of good news that we're not in a credit crunch, but at least not yet. But it's something to keep an eye on. If we surpass the highs at the beginning of the year, um, then there's some shit going on. But by that point, we'll probably have heard about it.
All right. And your
So,
next
yeah.
chart?
Oh, it's just zoomed in at that point,
okay.
just to show a little bounce. It's it doesn't seem like much, when you kind of like look at it, but the trend, right, over the past, since September 26th has been pretty much just up, right? So it did go down a little bit on September 25th, I think it was, yeah. But from the 26th on, for the next, week and a half, right, it just went up. So this may be sort of anticipation of the maturity wave coming. I think that's the most valid reason for this uptick again. But we're quickly approaching the August high. And then from then on, right, the next high is at 1.2%. So, we got a long ways to go to that. And I don't expect us to necessarily hit that right away if things don't fall apart. But we'll probably get somewhere back up to, 1.1% is my guess. Hang out there for a little
generally
while.
issuance is going to kind of come in hot and heavy all at once, right? So I wouldn't expect any smaller moves to make all that big of a difference.
Right. But they're there, right? You can't. The trend is showing us almost like a bull flag formation. I hate to do TA on spread, but
But you just did.
I know, right?
Yeah, can you put that in the folder next to all the TA on the VIX?
Yes, I will. So, but I'm just saying that the trend isn't down anymore, right? And it hasn't been down since 2022, right? So
Yeah.
like there's not, in terms of like a bull thesis, if you wanted to be bullish like here and now, you would want these spreads below 10% or below 1%. You would want that. That's really kind of the ideal Goldilocks zone, is for these credit spreads to be um to be more muted than they are. And this is definitely a byproduct of the inverted yield curve.
Yeah.
But it hasn't dropped as we've seen the bear steepener. And
Well, aren't yield curves kind of uninverting right now, though?
oh yeah, I've been posting charts in the
Yeah.
SPX chat of the yield curve and how the long end is reaching the short end, which is super bearish.
Like the 25 is starting to get a lot more tight. The 30-10. The 30-10's actually uninverted a few times, and the 210 and 310 are both getting pretty close too. But yeah, the 10 has stayed more stable. The 10 and the 5 have stayed a lot more stable than the 20 and the 30.
Are you guys excited for next week? You know what I think next week the big story's gonna be? Mama Yelly. She's coming. She's coming hard and hot next week, all week. And it's gonna be fun.
How do you,
$300 billion of bonds dropping next week.
I talked about this a couple of weeks ago. There's still a lot of issuance coming into the end of this year.
Yeah. Mama Yelly's coming.
How do you guys feel about the Dixie's failure to carry on its 12-week climb by 7 basis points?
It's just taking a break.
Yeah, it was a little strange. I think I think people who have hedge trades in other markets are starting to get pressured, right? So weird volatilities like that is going to happen.
Kirk, I posted a chart if you want to share that for all the
steepener.
Yeah, so this is
bear
steepener.
Yeah. You bastard. All right.
Well, I mean, it's important.
Why is it? Okay, explain this to me. Why is it called a steepener? What about it is steepening?
Ooh,
So
that sounds
the
too
thing
Latin. That's why there's no Latino
so
representation on the Fed.
so it has to do with the first derivative, JFresh. So like if the yield curve is going down, right, it's becoming more negatively steep, but mathematically speaking, it's becoming less steep, right?
Listen, the derivative is the slope. The slope is smoothing out. So
I'm
less
not talking
steep.
about the slope of the yield curve. I'm talking about the time
This
derivative.
it's the oh, god damn it.
Yeah.
I hate financial people.
Yeah. So I mean, what this is showing us is that the confidence, like you could even just the big jump, right? So let me jump back so I could actually look at so the big jump from September to October, and this is just the beginning of every month, right? The big jump from September to October is a really, really big signal that the bond market's confidence in rates getting back to their long-term trend, at least to some capacity, is quickly diminishing, right? Like that is a huge jump over the course of 1 month. And
How much
so
of that do you think is pushed by Powell, and how much of that do you think is pushed by the deficit?
I don't know. I think, well, this is purely the treasury market. So this could just be, it's a whole amalgam of reasons why you have governments, you have J-Pow, you have Yellen, you have all these things happening. But the end result is that we're seeing credit conditions on the long end rapidly tighten,
Yeah,
and that's really, really bearish. If you're somebody who's trying to buy a home on a 30-year mortgage, that's why mortgage rates are very quickly tapping 8% right now, is because of this sort of bear steepener and the inability of firms to get the yields that they need in order to have sustainable cash flow.
Every time you say steepener, I'm going to say bips.
Steepener.
Bips.
I love this already. Okay, well, we'll just call it the rising long end then.
Okay.
So yeah, this is a super bearish sort of way for the yield curve to uninvert. Ideally, you want the Fed to cut rates, right, and then drop the front end of the yield curve down to match and even get below the long end, right? But at this point, to get the yield curve to flatten, the Fed would have to cut rates by how much? Like 100 basis points?
150.
Yeah, so and that's not going to happen. And the Fed, their dot plot reiterated that that's not going to happen in the next year. And
Probably not the
the way
next two.
yeah, and the way the economy has been quote unquote resilient, it just reduces the likelihood that rates are going to go down, appreciably over the next 10 years. So like this is the bond market telling us that. And so, you have to take heed. And you'll see when the Fed does cut rates, you will see the long end react to some degree, but generally the long end does not move quickly. And it does not move by large increments, right? It just is what it is. The short end you can play around with and do some silly shit, but the long end is that's the big elephant in the room that's not going to move around. That's the governments. That's the real shit. So I'm keeping an eye on this as well. Uh, between now and 5 days ago, the blue line has not moved very much, like comparatively. So it's not worth kind of going to that like length. But these month by month sort of analyses on the yield curve um, show you a trend of tightening financial conditions, which is bad for everybody.
Except for equities.
Yeah,
Equities too.
it's pretty bad for equities. It's really bad.
No,
Actually, it's really
equities
bad
up.
for equities. Here's the thing: equities are just ignoring this right now. Like
Yeah.
their current pricing is not taking this into account, and that's not something that can go on for long, right? Like, yeah, I'm sure you guys have heard, "Don't fight the Fed." Well, they're trying. They're trying to fight the Fed, and they're not really succeeding over the last. I made a really good chart the other night
I saw that.
of
I saw
of
that, and that was beautiful.
give me 1 second. I'll actually pull it up here on stream just to
Please do.
because I wouldn't want anybody to miss it. Give me
Yeah, while you're pulling that up, yeah, so the fighting the Fed and everything goes up, right? I mean, I think the last few years we've had a lot of instances where just everything goes up, and it's kind of like, how is that possible? Well, in general, in an inflationary environment where the Fed is always increasing the money supply, everything can go up, right? You just keep pumping more money into everything. But right now, the money supply is contracting, or at worst case, it's been flat for a little while, but it's been meaningfully contracting for a while now. And so everything can't go up forever, right? At some point, you have to pick and choose. There's only so much money.
Well, yeah, and
Um,
Gap brings up a really good point. He says that in consumer specific sectors, we're seeing credit tightening, but the corporate bond market is tightening due to tertiary bond traffic with long lived, Walmart and high coupons. Essentially, the little guy is being forced out and investment is being covered by the too big to fail entities. So basically what he's saying is that these extremely well capitalized companies are sort of acting as a damping factor on the rest of the bond market. Oh yeah, Girk, I love this chart.
yeah,
So
I mean that's fine, but at the
so
end of the day, it's some of the parts, right? Everything can't go up in an environment where money is contracting.
Yeah.
I really wanted to take a look at, pickle jar sentiment versus what the market was actually doing. What does the layman think about the market? And I wanted to kind of go back to the peak of the market back in August and really see are the bulls winning? And so I went back to each date and found the most bullish statement I could find at the top of every upside move. And Jackson, pretty good, man. A put bought with 90 days to expiration at the beginning of August would have experienced $300 worth of delta improvement. So yeah, let's discuss this. Let's discuss how every time we get a green candle, Obi-Wan Jabroni seems to call the top of the bull market that just began.
It's incredible, actually.
He's got really good, if you were to inverse all of his bull calls, you'd be rich.
Yeah. Also,
Like
I
extremely,
have to
like his predictive powers inversed are phenomenal. They're better than mine.
They're even better than mine.
did you draw those red and green boxes after the price action or before? It was before, right?
What for this week? Those were from the beginning of this week.
You goddamn monster!
I know.
You're the reason that we shot up to the
Because
top
I
of that,
put a resistance on the downside.
and you drew
Yeah.
a green bar, and bulls are like, "Ooh, I like green."
Oh, so you're saying that I attracted the bulls by giving them this range of green price action? We did
Yeah.
stop at the very top of it, but here's where I failed. My projection for Friday, $3 off.
Uh,
Yeah, so I'm actually garbage at this.
Amy Diamond is a Dillionaire. I hope you know that, Girk.
I hope so. I wouldn't want his customers to go broke. That's why he fired Tom Lee.
Did he?
Yeah, like 3 years ago.
Tom Lee worked for.
Yeah, he was like the head of equities for JP Morgan.
Oh my god.
He didn't call
Of
the
course he
COVID
was.
crash. He was telling everybody SPX was going to 3,800.
Oh my god.
I mean, yeah, global pandemics, they're so bullish.
Yeah. Well, I would love to share my meme 7 data, but I'm not there yet. I'm in like August of 2022. But what was really interesting is the meme 7 were only about like 16, 17% of the market back in like January 20, like right before the crash. Excuse me, right before the crash in the end of 18. And then through the COVID crash, it was like pretty steady at like 17%. And then after the COVID crash, everyone just started piling into big tech. I presume because we were going to live in this new world where we use tech to interact in everyday life, and everything would be funneled through tech as a middleman. And that shot the meme 7 up to like 26, 27% of the market all through 2020 and 2021. And then in 2022, now it's actually dropping as a percentage again. And I don't know how low it's going to go yet until later in the day. But I know that right now the meme 7's around or more than 30% of the entire SPX. So we'll see. We'll see how long that can last.
It's
Well,
very
how
interesting.
long can the 10-year tips stay diverged from the Nasdaq 100?
Oh my God. That just keeps getting worse.
I
Everyone
know.
keep like, I can't look at those on Twitter. I just scroll past it because if I sit there and think about it for any meaningful amount of time, it just makes me bearish, and that's dangerous because people have been posting that chart for like 6 months, and it just keeps getting worse. They're
I
just
think
like, oh, it's so bad, it's got to close, and then it just gets worse, and then they're
yeah.
like, now it's even worse, it's got to close, it's coming, and then it just gets
Win
worse.
50% NQ correction.
Oh God. I
When
mean,
Tesla bankrupt.
okay, so to me, I really think that people are going to hold on until you start to see cracks in earnings projections from the big 7. So like Apple, and I think a lot of what we're doing now, like sort of this correction we're in, a lot of it has to do with Apple having a scary
An
projection.
honest take.
Yeah, and so I think, as AI fails to drive any meaningful money into any company other than just like, I mean, we're still burning through speculative money where everybody says, here's $500 million or a couple $100 million for some dipshit to run his algorithm that helps you schedule meetings better somehow, right? And no one's gonna ever use it, and it's gonna go nowhere. But it's burning through hundreds of millions of dollars, right? And a lot of that goes into people like Nvidia and Microsoft and AWS and other cloud providers. So there's still a lot of money going in, and that's showing up on the balance sheets of those companies. But when those dipshit companies start running out of runway because their investors are pissed off that they pumped all this money and it got nothing out of it, that's when I think this starts crumbling. But it's going to take a while. So barring any like credit crisis or other sort of event, I think this is going to just drag out and be obnoxious, and it's going to be a dirty knockout fight through the end of the year, I think. Obviously, the bond market is going to be a drag on equities, right? Because who's buying equity? The only way equity still makes sense in this environment is immaculate growth stories. Um, and so that reality is going to drag on a lot of companies, especially everything outside of the Mag 7. We've already seen deterioration of all of the other stuff pretty dramatically. And a lot of that's being hidden behind the Mag 7, but that I think will continue, which will drag down on indices, and also drag down on the memes. But they're going to try to. I think they're going to try to hold in until the writing's on the wall in the earnings reports, and they can't fake it anymore.
Yeah, that's pretty much where I'm at. Like, it really, that's where I've been. that's always been the case. I think that, like, just these companies are so well capitalized, and I mentioned this in a DMD one point where it's like the company does a thing and then gets a bunch of investors and becomes well capitalized, and then it gets more investors because it's well capitalized, and it gets better capitalized and gets more investors because it's so well capitalized, rinse and repeat. And it's been going on for so long now that these companies are just these juggernauts, and it's kind of like, you know, uh, you have to see the god bleed before you understand that it's mortal, right?
Yeah, and at the end of the day, it's like how do they keep sustaining more and more money? Yes, they can only suck so much money out of the economy. We only need so many phones and YouTube videos on demand, right?
Yeah. I mean, well, at some point too, people are just going to stop buying the new iPhone if they get poor enough.
It'll
People
be
are going to
interesting to
start.
see what's going to happen on these next, because I mean, a lot of the analysts are all about saying that like iPhone 15 sales seem to be robust. So we'll see what reality is coming up here in another month or so.
Yeah, having a hot pocket's never deterred anybody from buying an Apple device.
Or like, remember Bendgate, where like people were sitting on their phones and they were bending?
Oh yeah, yeah.
Yeah, that didn't stop them.
Gaff says, without giving a lot of context, I can paraphrase a hysterical story about a certain VOIP conference company that used a direct competitor for all internal calls, over 20 people for 16 months. Then they released their support for large calls, and everyone went back to the office. Nice. If you haven't already, could you talk about how to manage a debit spread like A, B, and B play? I paper traded a 2-to-1 ratio rather than 3-to-1. 3-to-1 raised the break-even point, so that's why 3-to-1 was chosen. If you want to manage it, you like on the upside, you can just hedge. You can, I mean, you'll have to pick up some additional debit, but you can hedge or you can sell. You can sell out, like if there's a bounce, you can sell out of the money puts against the additional 2 legs, in order to like offset some of the theta decay during the bounce, or capture some of the upside. So if you've dropped like $10, you can sell a $15 out of the money put and then close it after the bounce.
Ew, management. Gross.
Yeah. All right, so what do we think for S&P
For
for this
next
week?
week.
We do have a little options data right now.
Okay, so this is going to be a fun week for us, I think, because we just had a international conflict. Well, I guess not necessarily internationally, but kind of international conflict just spark up over the weekend. So let's test our metal, huh?
I was feeling kind of bearish about Monday into the end of the day Friday when we failed to gain 43.30, and the call buying kind of dried up, and all the call sellers that had gotten squeezed out seemed to pile back in at the money.
Yeah, I'm not particularly bearish or bullish this week. I very rarely am. I guess I am ironically sometimes when I want it to go down. But now that didn't work last week, I guess I didn't give a prediction last week because I was laid up with a
That's true. Yeah, you fucked us
back
all.
issue.
The
Yeah, I
market
should have
just
at least.
decided to end the week exactly where it started, and it's your fault.
I'll say I still think the story this week is Mama Yelly dropping that jelly, 300 Billy, and mixed duration with some really long duration in there. I think that's going to drag down. I think higher bond yields are not done spooking people. I think the conflict in the Middle East probably right now will only affect oil, which will make it go up, which
That's
might
gonna
scare
affect the
people.
dollar, and then affect
Yeah.
yields, and then affect equities.
Um,
Oil spooks everything.
what other What other data did we get? Oh, we get PPI.
We get PPI and CPI this week.
Oh shit.
Yeah.
That I'm not sure. I don't know how it's gonna. I think headline's gonna come in hot. I don't know about core.
I
We
think
also get more
cores,
jobs.
well, I don't know if I have to look at PPI. I'm not sure if we have enough months of hotter PPI due to energy prices for energy prices to start inflating core just yet. My thoughts on that were we probably wouldn't see energy reflected in core until November or December. But last print was a little higher, like it ran a little hotter than expected due to energy, right? Like the realization of that on the consumer side was a little quicker than people would have thought, like the spike in energy. So it's possible that core moves a little higher. I don't think it's gonna like go crazy, but it could be a little higher.
Yeah, okay, so with all of this data and with Mama Yelly and with the Middle East, I think that the trend will continue down, but the volatility is going to be quite high.
Yeah.
So I'm just going to say intense sideways action.
Intense sideways. How much of a range do you want to slap on that?
1% up and down.
Ooh. So 43.40 to 43, 42, 60, 70?
Maybe back to 42.20 on the downside.
Oh, okay.
Maybe like touch it once.
Is that good?
That's what I'm going with. Hold on, let me look. Yeah, that
All
looks
right.
good.
Is it my turn yet?
Yep.
All right. I think Dow's going to get a little boost from everything.
Okay.
So that'll have a damping effect. Volatility probably going to be high, but I don't think it's going to be that high. So I think we open the week slightly bullish. Move up, retest 43.30, then slowly trend back down to like 42.50 by CPI, maybe 42.75 by CPI. And then from there, my bearish moral compass points me to a bearish outcome on that. And so we go back down to 40 to 25 by end of week.
So like that?
Yeah, something like that.
Okay. For me, I think knee-jerk reaction is going to be bearish to the data, regardless of the gain in Dow. I think it'll drive up volatility and create at least a little panic till the news starts to normalize. So I'm thinking that we lose the 4,300 range and trade between like 4,300, 42.75 into like Tuesday. I think we get slightly cooler PPI, which comes first, and that might bring us back up to the 4,300 range. And then I think CPI will be bad. We'll go down Thursday, maybe even lose 42.70. And then up into the end of the week. Yep. Although I think all of us can agree that Monday is just a big fucking question mark.
Oh yeah, for sure.
And and whatever we're projecting here will be drastically changed by how hard markets want to sell off into the face of yet another armed conflict.
Ooh, that's a good request. We can ask Obi-Wan if he pops around in the chat
How
later.
bullish he is?
Yeah, we should get his guess too.
Yeah, I'll ask him.
We already know Jackson's 12,000 in a week.
Yeah, Jackson's the ultimate definition of broken clock.
He'll
Well-
be right one day, and he's gonna be really right.
You guys have to remember that Tom Lee has projected like a massive rally. Although now
Yeah.
he can pull that projection back because of the war, so
Yep.
maybe it means nothing.
I've if you really follow like Tom Lee's projections, he pretty much just, if the market's going up, he predicts it's going to keep going up, and then once it starts going down, he just says it can go down for a little while and then it's going to go up more later.
It's true.
And he's always right. He's always right because he's just following the trend. So if you want to know what the market did last week, go see what Tom Lee projects for next week.
You know, I kind of like Tom Lee because.
Oh, you shut the fuck up.
So
I'll hear none of this.
Hear me out. Hear me out. Okay. There needs to be a push and pull in the market, and without people like Tom Lee, right, we wouldn't have anybody to be able to dunk on when we're right.
I don't know. I'm just considering. I mean, should we just ban Dork forever, or what?
I'm trying to figure out how to time him out, but I'm not
There's
sure
a
I
place
have
in the world,
permissions on
okay?
this server.
There's a place for Tom Lee in this world. Unfortunately, the thing is that people suffer along the way, and that's the part that does make me not like it as much.
I always feel with guys like Tom Lee
anyway.
that are so either they got to their position by being through like nepotism or you know, favoritism, right? And they're actually just idiots. They're just idiots in charge, right? Or they really do know what they're talking about, and that just means that they're lying to people, right?
Those are actually the only two types of people in finance. There are no actual. Yeah, there are no actual truthful, intelligent people in finance.
I'm in finance.
Well, there are, but
which one would you rather be?
Fuck. It's clearly nepotism.
Oh god.
There was one dude who I saw recently, and he actually did manage to get in the debate with Tom Lee. He's a bear. God, he's got like this like buzz cut sort of thing going on, and he's like rugged handsomeness, you know, young looking dude, virile, kind of want to jump his bones.
Jesus
I gotta remember his
Christ, dude.
name.
Just get to the point.
Wait, no, describe his abs first.
He didn't show his abs on the news, unfortunately. I would have documented that heavily with my penis. If he had, but,
yeah.
So he actually was truthful, and I think he made some very cogent points that we've touched on consistently. So I'll have to search him up and figure out more about him.
Later when you've got some alone time.
Yeah, I'm gonna mostly figure out where he lives and what its like daily schedule is. No, I'll try to remember who he is and see if I can find that, you know, some of his things. But he's brought up some good points, so I'd love to see if he does some more independent content. Because having multiple perspectives on issues that we discuss is always valuable, even if someone is blatantly wrong, like Tom Lee. The thing is, it's important to not necessarily recognize and validate, but to understand those perspectives, right? And to see, you know, the truth is always somewhere in the middle, right? Of like the ultra bear and the ultra bull and the, you know, and even the neutral people, their truth is not necessarily the one that is the direct definitive outcome. But these perspectives are all super valuable to understand. And a lot of times they'll bring up good points that maybe you didn't think about, you know, or maybe you didn't think about them in that way, and you can sort of, you know, run them through your own internal, you know, mechanisms to see how they jive with what you believe. But I'll have to find out who he was, and if I find him, I'll put some videos in
I mean, just to piggyback on that, I think it's important to get those perspectives because most of the participants in the market are stupid, like stupid as fuck.
And they listen to these people.
Yeah, yeah, no, I agree.
And so the market is it's driven a lot by sentiment and sentiment of stupid people, right? And it's like, this is the frustrating thing to me about the market is, to me, even back at like 4,600, I it wasn't a super mystery to me that that we're going to go down eventually, because I mean, it just simply, there's no rational support for these prices, and it just waiting for everybody else to figure that out is very hard to be patient and wait for the stupid people to catch up. And I need to work on turning that into making money instead of just hating stupid people.
It's hard.
Well,
That's a hard barrier to overcome.
Yeah, well, it's also hard to like time the like realizations. That's such a hard, like it's impossible to do. So like it's always gonna be frustrating, and that's the thing is like that's why they say the market can remain irrational longer than you can stay solvent, is because you even if you were right and you fully anticipate something and it's going to happen with 100% certainty, the issue is one, understanding when something like that will happen. Like Michael Burry in The Big Short, he knew
Yeah.
that if unemployment went up to like 6-7%, he knew he would be 100% right on his swaps. But the thing is you don't know how
Well,
long.
he knew he was going to be right once he realized that the debt was being mispriced, right?
Well, yeah, he knew he was right in that aspect, but like the thing
But
is,
he was not prepared to wait for like 2 or 3 years for that
no, and that's the thing is like
to bear out.
he crunched the numbers and he knew that like on average these whatchamacallit, the actual baskets of debt, like he knew that on the percentages of them, how many of them were subprime. And he could extrapolate that, if on average, this amount of them defaulted, right, he could make this much money. But like at the same time, you know is someone else who could have identified that but what didn't have an ISDA would have to just short the market, right, or short the banks to sort of play that out. But you're gonna have to be in there for a really long time and experience the pain, because it takes so long for the rest of the world to figure out that you're right. And
Yeah.
it's extremely frustrating because you'll see shit just go up and up and up, and you're just like, why is it going up when nothing looks good? But it's just, yeah, it's purely because the talking heads say up, and then the people believe up, and then they buy into up, and that's just how the world works. Unfortunately, it's
We
it's
do
an
we
idiot
do have
world.
bank earnings next Friday.
We have some next Friday.
Yeah, bank earnings.
I thought it was the week after.
13th, Friday the
Who are
13th.
the big boys?
Who's usually first? Was it like BlackRock, B of A, Wells,
I think B of A
JPM?
is next Wednesday or something.
Oh, okay.
Yeah, they're next. Well, they're next Tuesday. They're not next Tuesday, but
They'll
the
all be
Tuesday
within 3 days,
How's
Yeah,
Cree looking?
3 or 4
I
days.
haven't really been following it, but I know people in here are like religious Cree players.
Oh God, I don't understand the thesis there.
Isn't it just short buy puts on Cree to short all of them? I don't know.
Yeah, but why would you want to short them all together in a basket? Why not just buy puts on all of the banks, and then the ones that fail you make fuck tons of money off of?
That's a great point. I'm just saying, how much room does Cree have? Because if Cree fall, the banks fall,
It's at
that's going to put a
41.
drag.
It's got some room.
It's got some room down. Oh,
Yeah.
it's got some room. Well, yeah, it's got a little of both, but it's not looking great.
No. Yeah, I don't know. I would just buy like fucking 0.1 delta puts on everything with like 12 months, right? Like why? I don't understand. Like, because if one of the banks actually fails, you get tax-free gains.
The thing that bothers me was you had tweeted about how if people really want to stick it to the banks to withdraw their money from the bank that they bank with and then buy puts on them.
Mm-hmm.
I like that idea, but I bank with Chase, and I know they're not going anywhere.
Well, They would if everybody
Well,
withdrew all their money and bought puts.
That's true.
My
yeah,
real play there is I'm just long Schwab and Fidelity, right? That way, when everyone deposits all their money, they withdraw all their money from the banks and deposit it with Schwab and Fidelity. Boom. Then I'm out
Yeah.
without having to worry about which banks.
I mean, it still amazes me how much money is in low yielding accounts. Like, especially now, like literally in 15 minutes, you can get money moved to an Apple savings account with at least 4% from your phone. You don't even have to, you just like, it just uses all your existing passwords and shit. You don't have to like think about anything.
Nope.
And yet
So you're
there's
part of
still
the
so much
problem.
money. There's still so much money in 0% accounts.
Yeah, there is a lot. No, I agree. I have a friend of mine who was talking to me about some of his like upcoming financial woes over the weekend, and he's got like 500 grand in just a savings account, like
What
a
a fucking moron.
savings slash checking at like 0.087% interest.
Reminds me of my first savings account when I was a kid with Southern Bank. I can't remember what it was. It's gone now, but it was a special kids account and it was called the Savasaurus plan and it
Oh,
had a
nice.
dinosaur on the front. And it
My
was just basically like we waive fees and let you have an account to play with as a kid to learn about bank accounts so you grow up to be a good bank user.
yeah,
That's how I imagine your friend. He's literally like
he's a good
balancing
bank
his
user.
checkbook. He's balancing his checkbook in his Savasaurus, uh, like his little Savasaurus pamphlet
Yeah.
with the little dinosaur on the front. And you're like, I'm a good Savasaurus.
I told him we could buy the 20 year at like 5%. He was like,
so
I
Biden,
don't really understand how to do that. That sounds complicated.
so Biden has said military aid is now on its way to Israel.
How much?
I don't know. I'm gonna find out.
There's
You're not
always
long
money.
computer share? Not anymore.
There's always money in the banana stand. Mama Yelly's coming.
Are you saying your
It's not.
friend needs help? I've got a guy. So I'm trying to add my high earning friends to your book, Poopy Pants. I'd give them to crypto first. They sent an
Yeah, most of
aircraft carrier. Well, they've got to do something with them.
they're doing more than an aircraft carrier. They're doing like a fleet.
They're doing the whole shebang.
Well, just a
They're
straight up
just gonna protect
plane.
shipping routes from pirates, right?
I mean, we're not gonna fucking just give them an aircraft carrier. I'm assuming it will be fully manned. So I guess we're just deploying to Israel.
Sounds like a police action.
This is a good point. Carl's asked it how if issuing bonds is bearish on equities. It's somewhat. So the duration really matters because right now a lot of the short duration stuff is just getting eaten up by on RRP. They're just moving money from overnight returns to 3 month, 6 month, 4 week, 8 week, all that shit. But Mama Yelly's selling, I think 310 and 30 this year, and it's not huge, but I think it's like $100 billion of serious duration, and a lot of those on RRP funds because they're money markets and have to be somewhat liquid. They're not going to want to buy those, so kind of like 100 to 150 billion's got to come from somewhere else, which is not nothing.
Yeah,
So I
it's
think
quite a
it'll
lot
definitely
actually.
put a drag on equities and pretty much everything else, right?
Yeah, look, I think before we end today, we should discuss the liquidity effects of the bond market crashing, and the continued issuance and probably the continued raising of interest rates by the Fed. This liquidity problem isn't getting better, right? And so like back in August, we discussed a lot as we were nearing the top how liquidity was kind of running out. This like equity liquidity that drove all of this, and if more buyers weren't found at these higher prices, they simply wouldn't be able to sustain them, and that ended up being ultimately true over the last 3 months, right? Um, that's still true now, except more so. So
Yeah,
now
and
on our upside moves, there's going to be even less liquidity unless it's provided by, like CTAs or whoever's selling short puts en masse, whatever bank or institution that may be, and retail, right? And retail doesn't really have a lot. We already know that, and their student loan payments are going to resume this month. So the consumer's ability to invest even more is dwindling, right? And so before we were like even back in August, we were aiming for like gamma neutral, and they didn't get the liquidity to get over that. Now like they're pumping, and the positioning that they threw up on the chain on Friday really indicates they're trying to test delta neutral. And so even if they pull close to that, they'll probably fail to get it just due to the lack of liquidity. And this continued issuance that JFresh is bringing up is only going to tighten up that liquidity even more. So without a liquid environment presenting itself to the upside, there starts to become only one place to find sufficient liquidity, and that's the other direction.
or the thing. I mean, it could also. I mean, illiquid environments. The thing about them is they don't necessarily have to mean up or down. They just mean you're going to get ineffective and inefficient pricing, right? So
Volatility.
there's yeah. So there's a you're right, and any sort of move, right, is probably going to be mispriced on the way up or down
I mean, I
because they're
think
trying to.
look at the end of day Friday. Like the beginning of the day Friday, calls were almost free, right? And then by the end of the day Friday, they were expensive as fuck.
Yeah, and that's
So
illiquidity leaking through the options market.
yeah, and like to continue to push up means buying more and more and more of those increasingly more expensive options, right? So not only do you need more of them to move the price higher, the price of them is also increasing exponentially.
Yeah, but I think it's important too that a lot of people that saw the writing on the wall at the beginning of the year and missed a lot of the hype pump. They're still out and they're not interested in getting back in up here. Um,
No.
and so I think we have a bifurcated population of buyers and sellers, right? There's a lot of sellers, or there were a lot of sellers that would become buyers under like 3,800, and there's a lot of longs that are just trying to never become a seller and trying to basically float above that. But I think the issue with the liquidity is that a lot of what they're trying to do is make income on all this long shit by selling options, right? So try to reduce volatility, but as liquidity dries up, volatility is going to rise, and at some point volatility will simply just be larger than what they can sell, and then that will unwind the volatility play, which will then unwind the longs. And I mean, I think this is probably in the modern era where these crashes happen quickly and then recover quickly. That's probably close to the mechanism that happens just about every time. So we're sort of just
Yeah.
waiting for volatility to pick up, right? Enough to just squeeze out and scare short puts. And right now, they've just been very diligent and refusing to let any short puts actually squeeze. We always seem to squeeze to the upside, and we never quite squeeze to with the same ferocity to the downside, with few exceptions. So yeah, I mean, at some point it'll happen, and the question is when, right? I think probably Again, probably earnings. We need some bad earnings from the big boys.
Yeah,
Yep.
that's probably a true statement. I mean, well, a lot of things can happen between now and then. Like the route in the bond market, if it extends equivalently as far as it has already, like there's a very good chance that we can get, you know, a collapse and like. And look, if anybody needs to go to the market with and mark to market securities right now, they're in a world of hurt, right?
Yeah.
So I mean, and that could happen. That could happen at any time right now. But I will say, one thing that I found really interesting. I just pulled it up here on the chart. Is that our VIX futures correlation, still closed despite the week closing, you know, relatively flat or up, right? Our correlation still continued to rise. Like we still held on to like a 3% increase over the prior week. So like the volatility environment we're in is still moving towards higher volatility.
Yeah, it looks like on the options chain for the VIX, which will give you some sense of the connection to VIX futures, it
Yeah.
still looks quite bullish on VIX. Like historically, we are still at of quite an elevated bullish mix of options. So yeah, the people who are dealing and hedging VIX are not done hedging upside on volatility.
No. And now with an international conflict, I expect that the desire for tail risk hedging is another international conflict. I would say that
Yeah.
the desire
Just keep
for tail
piling them
risk
on.
hedging
Again,
is going
what
to pick
happened?
up even more.
What was the big news in Syria the last 6 months? Does anybody know? No.
No, nobody fucking knows what's going on in Syria. There's just like we have drones there or something. You know, Gaddafi's dead, right? That happened like 2 years ago or something.
Just add another crisis, add another conflict on the pile. Just ignore it in a week.
Well, this one's more important to U.S. equity markets because apparently we're gonna have some direct involvement, at least through our navy. So
yeah, we're all hot for Israel.
Yep.
Israel's like the America proxy in the Middle East somehow.
Well, it's our foothold in the Middle East, so we're not gonna give it up.
Not for free.
Never gonna give you up.
Bad timing and taste.
Now I'm just imagining Biden singing that to Netanyahu.
Oh, okay. I thought you were rickrolling.
I was.
Oh.
Sort of.
Syria, Israel, not quite the same, but right next to each other.
Yeah, Syria's bigger.
Yeah, Syria might be attacking Israel right now, so that's a whole nother. Well, armed militants in Syria. Does Syria actually have an army anymore?
When I ask that question, it's because I have no idea myself.
Okay. Yeah, I'm not really sure. Didn't Gaddafi die like 10 years ago? Maybe. Yeah. But like I don't know.
Gaddafi was he was somewhere else, wasn't he?
Was he? No.
I believe
the current guy in Syria is not Gaddafi.
Yeah, well, that's because Gaddafi's been
He's
dead.
got like a little mustache. Anyway, my point stands. Nobody knows what's going on in Syria. Nobody cares.
Gaddafi was
we'll
Libya.
Yeah, that's right.
Libya.
Who the fuck is Syria?
Is that guy with the little mustache and the real quiet mouse voice?
Bashar? Is it?
Al-Assad.
Al-Assad.
Yeah. He if you've ever seen him talk, he sounds so meek and like, you know, he sounds like a biology researcher or something, not like a warlord.
He was probably educated at like Harvard or Oxford or something. So
Yeah.
Syria has Russian-backed army. Russia doesn't have a fucking Russian-backed army. No one's really concerned with Russia's take on shit. All right.
If Russia had a real army, Ukraine would be a burning pile of shit right now.
Yeah. If
and war would-
Russia had 1/10 of the military might that they had in 1970, Ukraine would be a flat wheat field at this point.
so much wheat.
So
Yeah, mostly. So Syria's army, the SDF, I believe, they exist,
okay.
but there's still like the Kurdish Peshmerga, I believe, are in Syria as
Look at
resistance
us becoming Middle East experts in an
Wait,
hour.
hold on.
We've done it.
Is Turkey gonna break away from NATO now?
I don't know. I'm not going to purport to be a Middle East expert. I know a source familiar with the matter, and I remember them talking about helping the Kurds. And like the U.S. likes the Kurds, Russia doesn't like the Kurds, and it's just a whole thing.
Cheese curds, all kinds of curds. U.S. loves curds.
Yes, we do. That's why Wisconsin is still a U.S. state, and we didn't just give it to Canada.
It's true. Yeah. Despite the accent.
All right. I don't want to. I'm going to say something that's going to get me canceled. I think at this point we got to be careful about what we talk about.
JFresh, this channel was canceled a long time ago.
Fair
let me be real with you. I wanted to say thank you guys for those of you that do leave comments and attempt to get the channel unshadow banned. It's appreciated, and YouTube is noticing. So for those of you that do like and comment on this crap, it is appreciated. So thank you.
Yeah, don't forget to like and subscribe to help bless the YouTube algorithms and bring us to
Yes.
the top of the search bar.
Yes, bring us to the top so that we can talk about JFresh's and Dork's hashtag cum race to a broader audience. Because it's really not worth doing unless there's a lot of people watching it.
Now that I remember what we agreed to, I absolutely think we should race.
Yeah. Yeah, and
it's the only way to finally settle this for all of humanity.
Live from a truck stop bathroom near you.
we'll get it set up. We'll make it a thing. All right, guys. Thank you for coming on. Everyone, go do other things for the rest of the day, and then I'll have Pickle's picks out tonight once we get some more options data, and I'll get everyone filled in on what tomorrow looks like. Thank you guys.
Yeah.
Appreciate it.
Thanks for having us.
Always fun.
Later.
Take care.
Thank you guys, the rest of you, for tuning in. I'll see you all tomorrow. Have a good rest of your weekend. Later, everybody.